Good afternoon, everyone. Thank you for joining us for the Truth About Employee Retention Tax Credits. My name is Heather Fay, and I am the Regional Program Director and Botetourt Advisor for the Roanoke Regional Small Business Development Center. We have some more folks joining us this morning, or this afternoon, I should say. It feels like morning. Today has gone by really quickly. If you would be so kind to give us your feedback in the poll. Tom, our presenter, has put together just a few questions that will help us guide our conversation today. And if you like and you want to, if you would be willing, you're welcome to introduce yourself in the chat. We'd love to know where you're from, what your name is, and if you feel comfortable sharing your business, that's great too. If not, no pressure. All right, so let's get started with some housekeeping. Our virtual workshop today is an hour. If you would please keep your microphone muted. We are going to record today's workshop and we'll send that out to you after the fact. We're also going to post this on our YouTube channel. I have enabled closed captioning. If you would like to use that at the bottom of your screen, if you are on a desktop or a laptop or a tablet, you should see your menu at the bottom of the screen. On your phone, you may have to slide over a couple of screens to be able to see that menu. Like I said, if you're willing to use the chat, we'll also use that for question and answer. We use Google Meeting. We use Zoom meetings, excuse me. So you're able to interact. You can chat with direct message to me if you have a question for Tom or presenter. You don't want to post that in the chat publicly. I will keep track of those and ask those back. Or if you have some tips that you want to share with our fellow colleagues today, feel free to do that as well. And of course, for those of you who want to take notes, help yourself to do that, pen and paper or tablet, however suit your fancy there. And then we're here to support you. We are a part of 27 different SBDCs across the Commonwealth of Virginia. We're part of the Virginia SBDC network, which I'll share a little bit more about in just a minute. But we have advisors all over the state that are standing by to help you on your journey. And at the end of today's presentation, we'll do a brief evaluation. If you would be so kind to give us some feedback, that way, as we were planning for 2023, what workshops and topics and feedback so we can provide really good content to you going forward. We greatly appreciate your feedback. All right. And if you want, we love interaction. So you're welcome at the bottom of your screen on your Zoom menu. There are little emotions that you are welcome to share with us, or you can drop a little comment in the chat. That would be great too. Again, no pressure, but we'd love to engage with you. We miss that personal interaction sometimes when we're joined virtually together. So, all right. So some of you may be familiar with the Roanoke Regional Small Business Development Center, or some of you may not. So I thought I'd just bring everybody together and share that we are a small and mighty team. We serve businesses in the greater Roanoke Valley, Franklin County, Allegheny Highlands, and the New River Valley. We offer confidential advising, education, workshops, events, and online resources to help your business thrive. Be sure to check out our website. We have a whole library, as you can see some little snapshots here on the screen, and I'll post that link in the chat for worksheets and articles that'll help your business run smoothly. While we offer a lot of workshops and training, we highly encourage you to get matched with an advisor, whether that's in our center here and you're in the greater service area that we work with, or you're across the Commonwealth. There's an SBDC near you. And I'll walk you through how to do that on our website. So this is our advisor match here, and you'll walk through these couple of steps. You'll enter your name and answer a couple questions, and we'll get you matched with the best advisor for you. Through our SBDC team, we strive to meet you where you are in your business and throughout the life cycle of your business, and we can't wait to watch you grow and be a part of your journey. The Roanoke Regional Small Business Development Center is funded in part through a cooperative agreement with the United States Small Business Administration and is supported by America's SBDC, the Virginia SBDC, and the Mason Enterprise Center at George Mason University. Pandemic-related capacity building grant funded has been provided by Go Virginia, and other funding is provided by local administrations, economic development offices, organizations, other businesses that are all champions in your corner. I want to give a special thank you to our host, the Roanoke Regional Chamber of Commerce, for providing space and support for our work. As I mentioned, there's 27 different centers across the Commonwealth of Virginia. So I will post a link to that if you are not in our area of where you can find the SBDC closest to you. All right, we have so many upcoming workshops, and it seems like as I was typing this up, gosh, September 20th is a jam-packed day. I will post a link to our training page that has access to all of these workshops, events, and programs that we're offering in September. And then going forward, if you'd like to be on our mailing list, if you want to let me know that, I will be glad to add you, and then you'll get an update from us going forward of what's happening. All right, I want to thank you for taking time out of your day to work on your business. I will encourage you to follow us on social media. We're active on Instagram and Facebook, and then a lot of our recordings for our workshops are posted on our YouTube channel, and we're also active on LinkedIn. All right, it's the moment y'all have been waiting for. It is my pleasure to introduce our speaker today, Mr. Tom Tanner. Tom is our lead advisor, and he is just an absolute vault of knowledge. I refer to Tom often as the vault. He has been with the SBDC for a really long time, and we are just so elated to have you join us today, Tom. So I'm going to stop sharing my screen and turn the microphone over to you. Please join me in welcoming Tom. Stop sharing. Tom, we can't hear your audio.
All right, how would you like to receive $26,000 per employee from this little known tax credit? I'm sure some of y'all have probably heard radio ads like this, probably seen Facebook ads. You may have even gotten phone calls and looking at the poll, which I'm going to stop and let everybody look at to see. It looks like a lot of y'all have received information trying to tell you what's going on in this program. And part of what we're here for today is to try to get you the truth. So it sounds really cool, and I'm sure all of you would like to receive $26,000 per employee. Unfortunately, it's not just that simple. Plus, looking over some of these information that they're putting out, they're actually partly misleading some groups of businesses out there that may qualify, but if you look at all this information, you think you wouldn't qualify. So today, what we're trying to do is trying to give you the truth behind the employee retention credit, also known as the ERC, also known as the ERTC. So it has a bunch of different names to it. If you had been to one of my classes on the ERC before, and you may or may not, because I started doing these classes back in 2020, since this program's been around for that long. And it really has not changed much. It's just that now everybody's seeing these ads, everybody's getting called, and everybody's getting interested in what's going on here, even though I've been talking about it for 2 years. So let's move on. So one of the biggest things that's going on that I see that is a little misleading, and some of y'all may have gotten the same information, is that they'll see these things that says, did the business have 5 or more full-time W-2 employees? Okay, that is not true as related to this particular credit. It's probably true to these businesses that are trying to get your business because they don't want to deal with businesses that have less than 5. But as long as you had 1 employee that was a W-2 employee and they qualify under the other stipulations, then you qualify for this credit. The other thing that you really have to kind of dig down into the program to see is that these particular companies will charge you 25 to 30% of your refund amount as their fee. So if you're getting $20,000 back as a refund, they're going to charge you $6,000. Or for some of you, maybe getting $100,000 back, they're going to charge you $30,000 to fill out a couple of forms. So I certainly recommend, if after this session you go, I think I qualify for it, then if you have a payroll company, the first thing you want to do is go to your payroll company, because they can easily do this for you. If you have a CPA or attorney that you work with, I mean, a CPA or an accountant you work with, go to them, because they're certainly not going to charge you anywhere near between 25 and 30% to complete this process. So I'm not saying you don't use these services. I'm just saying you need to make sure you're aware of what you're getting into when you do this with these particular services. All right. So I really just want to say real quick is that I based this presentation on information that was available today. Things change. They make changes, et cetera, et cetera. I don't anticipate any changes because it's pretty firm. No changes have really been made since the middle of 2021. But if they do, just be prepared for it. All right. So what are we going to try to cover today? So there was 3 programs for all intents and purposes. There was the ERC 1, which was in 2020. There was the ERC 2 and 3, which was in 2021. And then there was a recovery startup business, and we'll cover each one of these. We're also going to determine eligibility. We're going to determine how do you actually calculate the amount of credit. What I'm not going to do is says, how do you apply for the credit? This is a basic overview. I'm going to tell you very, very simply what form you use, et cetera, et cetera. I'm not going to go through the process saying, okay, here's what you put on line 1, here's what you put on line 2, here's the math behind it. That's what you use an accountant for. That's who you use your payroll company for, et cetera, et cetera. That's not the purpose of this class. If you're here to understand how to fill the form out, you might as well leave now, because that's not what we're going to cover. Using the ERC with any other of the programs, which are the PPP, EIDL, et cetera, and what are the deadlines for this? All right, so let's jump right into the first program, which is the 2020 ERC. So this provides a tax credit, and we're going to be dealing strictly with businesses that have less than 100 employees, okay, which is probably everybody on here, but I just want to point that out. It's a little bit different if you have more than 100 employees. So provides a tax credit for any business that experienced one of the following. First of all, you must have had W-2 employees, not independent contractors, okay? So if you didn't have W-2 employees, this is not going to apply to you no matter what. All right. Your business was fully or partially suspended in 2020 due to orders from the appropriate government authority limiting commerce, travel, or group meetings due to COVID. All right. Basically, what that means is, were you not able to do business because of something the government did? Like you're in a restaurant business, you're in a retail store, and they said you can't open, okay? Plain and simple. Then you're affected by that, okay? Or, which is the case where most businesses are taking advantage of, is you had more than a 50% decline in gross revenues for any quarter in 2020 versus the same quarter in 2019. So if your second quarter sales, and I have some examples we'll go over. If your second quarter revenue numbers was $10,000 in 2020, and in 2019 it was 40,000. Well, you had more than a 50% decline in revenue during that particular period. Therefore, you would qualify. And again, I have some samples to go over. This can be for a profit or nonprofit. It's not available for self-employed unless you actually have employees, W-2 employees. Again, it can't be 1099, it has to be actual employees. And then it's only for the employees, not the owner themselves. All right, this was the biggest change that came out in 2021, which was retroactive back to 2020. Is available even if you received a PPP, the RRR, the EIDL, the SVOG, and whatever other acronyms that are out there that were programs. All right, so that's the 2020. So let's jump to 2021. So 2021 was basically exactly the same thing. The only difference was a major improvement. that your business only had to have a 20% decline in gross revenue for any quarter. It had to be for an entire quarter versus the same quarter of 2019. We're not looking at 2020. We're still looking at 2019. Was your receipts in 2021 at least 20% less than they were in 2019 for the exact same quarter? If they were, then you qualify. Okay. Again, same thing, profit, nonprofit, self-employed, et cetera, et cetera. And all this information will be provided to you at the end of the class. So you'll have all these notes and stuff. All right. So the other thing is what we call a recovery startup business. And this was probably more unknown than most other part of the program. And this applied to businesses that actually started operating after 2/15/2020. So if your business opened in 2021, this would account for you. So, and what they mean by started operating is that you started as a going concern. So let's just say in December of 2019, you decided to set up a limited liability company, but you haven't actually opened for business and started taking in money. Okay. But then you started taking in money in March of 2020, then you would qualify under this particular program. Again, it only applies to W-2 employees. So you have to have W-2 employees, not independent contractors. So it only applies to payroll in the third and fourth quarter of 2021. So if you opened in March of 2020, it doesn't help you any until the third and fourth quarter of 2021. But if you opened in January or February of 2021, then you can count for it in the third and fourth quarter of 2021. I had multiple clients take advantage of this in terms of quite a significant amount of money that came into them. So if you fall within that category, you certainly want to take advantage of it. The only thing there is you had to have gross sales of less than $1 million. And most likely, if you started after 2/15/2020 in the middle of COVID, you're probably going to have less than $1 million in the calendar year anyway. There's no requirement for decreased sales. In other words, you don't have to say, well, my sales in 2021 were less than 2020. None of that applies. It's strictly, if you opened after 2/15/2020 and you had W-2 employees and you did less than $1 million, you qualify for this. Same thing, it doesn't have anything to do with a full or partial shutdown test, et cetera, et cetera. So basically the way it's figured, and again, we'll do some math in here in a minute, 70% of all wages up to $10,000 per employee. So in other words, you can get $7,000 credit per employee per quarter for each for the third and fourth quarter. Now that's up to, in other words, those individuals would had to have earned $10,000 in that particular quarter. But again, when we do the math, it makes it more sense. The maximum amount any company can claim is $50,000 per quarter or $100,000 total. But still, I don't know too many small businesses out there that would basically say, it's only $100,000. I don't really need it. Okay. So if you qualify for this, you need to jump on this one. It also can apply to nonprofits, which is kind of weird, but it does also apply to nonprofits. All right. So let's jump into what are gross receipts, because we keep talking about gross receipts and stuff. So the easy way to look at it is look at your tax return, and whatever you used as your gross receipts for your federal tax return is going to be what your gross receipts are, broken down by quarter. But I mean the math that you use to figure out your tax return. This would be after returns, after allowances. Your income would not include PPP loans. It would not include EID advances. Restaurant, the RFR funds, shuttered venue operated grants, et cetera, does include most local and state grants because typically those are taxable. Okay. If you did get an EID loan, not an advance, but a loan, that has no bearing on your gross receipts. Okay. So if your business got a EIDL loan for $100,000, That $100,000 is not part of your gross receipts. Okay, so if you are a nonprofit, and I don't know, I didn't even look to see if there was any nonprofits on here, but these are basically what's included for determining if your gross sales or gross receipts for a nonprofit. All right, so what are qualified wages? Because that's the other term that we're going to be talking about is what's qualified, what's the qualified wages as in the figuring this out. So first of all, it's going to be wages paid to employees after March 12th of 2020 and before October 1st of 2021, because that's the period that the ERC ran. Okay. If you're dealing with the recovery startup business, that is from July 1st, July 1st, 2021 to December 31st, 2021. All right, wages and compensation, if you just think of it as all wages and compensation that's subject to FICA taxes, that's going to give you a very good baseline, which is going to include wages and compensation. It's going to include bonuses. It's going to include tips. It's going to include your 401k contributions by the employee, since those are subject to FICA taxes. But 401k contributions by the employer is not included in wages and compensation. All right. In addition to that, healthcare premiums paid by the employee that's pre-taxed, because if it's not pre-taxed, it's going to show up on their wages on their W-2 anyway. So healthcare premiums paid by the employee pre-tax and paid by the employer. So all the healthcare premiums can be added into that. So that's how you figure out your qualified wages. I'm not going to talk about aggregation rules because that gets pretty complicated, but basically that means if you own more than one company run by the same owners, there's a whole detailed information about how to figure that out. All right, so how is the 50% gross revenue determined? So we talked about you had to be more than 50% gross revenue decrease. So it's basically based on gross revenue for a quarter compared to the same quarter 2019. So let's, again, come back to the example is, let's just take the second quarter of 2020, your gross sales was $10,000, okay? In 2019, the second quarter, your gross sales was 21,000. Then you had more than a 50% decline. All right. The good thing about this program, again, the examples will help you sort through this. The credit's going to continue each quarter until your revenue has reached back to 80% to the same quarter in 2019. So if you're qualified in the second quarter, then you're going to automatically be qualified in the third quarter. If you don't reach 80% in the third quarter, you're going to be qualified in the third quarter. All right, so that's the way that program works. All right, and the same thing applies to when you're doing the 80%. The only difference is you're using a 20% decline, more than a 20% decline. In 2021 compared to 2019. Again, you're comparing to 2019. Even in 2021, you're not comparing to 2020. You're comparing to 2019. If your business was not in operation for the comparable quarter of 2019, then you would use the comparable quarter of 2020. So if you opened in fourth quarter of 2019, then you would have to, and you're comparing the first quarter of 2021 or the second quarter of 2021, then you would have to compare it to the second quarter of 2020. Fortunately, that makes it a little bit more difficult for a lot of you because then you're already being affected by the decrease. There is this thing called the alternative quarter. I'll just put it in here. It gets a little complicated, but I'll just put it in there just for your information. Again, the credit's going to continue until your revenue has reached 80% compared to the same quarter. All right. So what is the amount? How much money? Let's talk about the money now, because show me the money type thing. So the credit is equal to 50% of the qualified wages. We just talked about the qualified wages and how do you figure that? So it's equal to 50% of the qualified wages paid to eligible employees during that covered period. We always talk about wages include healthcare insurance paid by the employer, premiums, all with pre-tax dollars. So the maximum amount of qualified wages that you can claim credit is 10,000 maximum wages for a $5,000 credit per employee for the year. So in 2020, if you had employees that made $10,000 or $12,000, they could compare up to $10,000 of wages, which would be at a 50% credit, would be a $5,000 credit for that employee for 2020. Okay. And you can cross over different quarters. If the person only made 8,000 in one quarter and the company's still qualified the next quarter, they can then claim the other 2,000 in the following quarter. Even if the employee is still working, you can claim the credit, and that was the whole purpose of it, is to keep employees working. And as we mentioned, the covered period is from March 13th until December 31st, 2020. So now for 2021, it gets a whole lot better. And this was almost crazy what they changed the program to. So now instead of 50%, it's actually equal to 70% of qualified wages during the covered period. And the big difference is it's a $10,000 maximum wages, just like the other program, but you're matching 70%. So now it's $77,000 maximum per person, but now it's per quarter, where in 2020, it was for the whole year, maximum of $5,000 per year. In this case here, it's $7,000 per quarter. So if you had an employee that reached $10,000 and your business qualified for all 3 quarters, then an employee, I mean, you could get $21,000 for that employee for the year. And of course, if you add $5,000 for the previous year, you get $26,000, which is where all the things are talking about. Okay, so that's the way that's figured. We already talked about that. And again, the covered period is from January 1st through September 30th. All right, so this is a cool little chart I put together. Hopefully it gives you a really easy look at how this works. So round 1, eligible wage base is $10,000 per employee. The credit amount is 50%. Max credit amount is $5,000 per employee for the whole year. Okay, so now we go to 2021. We have $10,000 per employee, but per quarter versus per year. And now it's a 70%, which means it's a $7,000 per employee per quarter maximum. It's still based on how much wages they make. And then the third round is basically the same thing. The difference is the recovery startup business kicks in for the third quarter and fourth quarter with a maximum of $7,000 per employee per quarter with a $10,000 per employee wage limit. All right, so let's just talk about an example of the recovery startup business. And we talked about the qualified wages being $10,000 with a 70%. So I just gave you a couple of examples. Here's 3 employees, employee 1, 2, and 3. All right, so employee 1 in the third quarter received $15,000. Employee 2 received $10,000, and employee 3 received $8,000. So we know the maximum qualified wages for this program is $10,000 per quarter. Okay, so we're talking about third quarter, so we can say, okay, this individual has qualified wages of $10,000, and if I take a credit 70%, I'll get $7,000 credit for employee 1. Employee 2, they maxed out theirs, so I'll also get a $7,000 credit for employee 2. Employee 3, only got paid $8,000. So their qualified wages was only $8,000. But I'm still getting a 70% credit, which is $5,600, which now brings it up to $19,600 credit I get for these 3 employees for just the third quarter. And if we work at the fourth quarter, then you can see the same process. We got 10, 9, and 8. And then if we add all this up for this one business, they are getting $38,500 as payroll credit for these 3 employees during this time period. So needless to say, that's a pretty significant amount just for hiring employees if you're a recovery startup business. All right, so now we're going to jump into the 2020 program for the regular ERC. And this is looking at the gross receipts test so that you can kind of understand how that works. So this particular business, the first quarter of 2019, they did $30,000. Okay. Gross receipts for the first quarter of 2020 was $28,000, which basically said they had a 7% decrease. So it's not an eligible quarter, so they don't qualify for quarter 2. Okay. All right. So for quarter 2 in 19, they had $40,000, but in 2020, their gross receipts dropped all the way to $18,000, which means they were at 45%. All right, so they now qualify for the ERC for this particular quarter. Now we go to the third quarter. 2019, they had $50,000. 2020, they came back to $40,000, which brought them back to 80%. Okay, remember when you get to 80%, you lose your ability to continue in the program or qualify for the credit. However, since you're working your way back up to 80% in that quarter, you're still qualified for that quarter. Okay, you're just not qualified automatically for the next quarter. You have to requalify again for the following quarter. In this case here, they matched their revenue, et cetera, so they did not qualify for the fourth quarter. Okay. All right. So we're going to do the same thing for 2021. And I'm not going to go through the math. It's basically the same thing. Is you're saying, I dropped below 80%, therefore I qualified for the first quarter because I was below it. I automatically qualify for the second quarter because I'm working my way back up to 80%. Since I did reach over 80% in the second quarter, I would not qualify for the third quarter unless my sales drop back down below 80% in the third quarter. All right, now we're going to get nitty gritty into showing you actually how the math works. This is the exciting part. All right, so let's look at this and say, we got 3 employees in this particular business. Okay, this is again for 2020, and there's particular things that, remember, it's only limited to $5,000 for the year. All right, so we look at wages paid to this particular employee was $15,000. Qualified wages is $10,000, because remember, $10,000 is the max max wages that can apply. Employee 2 had $6,000, employee 3 had $3,000. So we had qualified wages of $19,000. All right, so now we're going to quarter 3. Quarter 3, employee 1 had $15,000 in income, but they used up their allotment of $10,000 for 2020. Therefore, they had no additional qualified wages for quarter 3. So therefore, this guy's done. All right. In this case here, they did $8,000. Well, he still got $4,000 worth of that credit left. So he carried it over into quarter 3. And for this person here, they carried this entire $3,000 over to quarter 3. And again, in this case here, they still had money left because it's less than $10,000. So they also in quarter 4, because they qualify in quarter 4, have an additional $3,000. So basically, if you add all these numbers up, That's your qualified wages. Take 50% of that and gives you a credit of $14,500. So that's the way 2020 works. So now if we go to 2021, it's completely different because it's based on a per quarter, not based on the whole year. So let's take employee one. He made $15,000 again. Qualified wages are 10. Okay. Quarter two wages for this employee two was 7,000. So all of that qualified. Same thing with employee three, all of their wages. So we add all that up. Okay, we now go into quarter two. This person made $15,000 again in quarter two. Well, his numbers are reset back to 10,000. So again, we can claim an additional $10,000 for this employee claiming 7, this employee claiming 3. And in quarter three, you can see again, they can continue to claim it because it's a max of $10,000 per quarter, per employee. So if you add all his numbers up, you've got $58,000 in qualified wages. And if you multiply it by 70%, that's a $40,600 credit that's coming to you as the business owner for wages paid in 2021. All right, pretty cool, huh? So a couple of other issues that need to be pointed out is if you received any sort of CARES funding, and this would be such as PPP, SFOG, RRF, or if you receive something like the Work Opportunity Tax Credit or Federal Medical Leave Act, any other payroll credit that you used or federal payroll credit that might be used, what you have to do is you cannot use the credit towards the same dollars. You can still use the program, you just can't use it. In other words, if you go back to this person here, so if this particular wages, if you had $5,000 PPP, well, this person used $10,000 in qualified wages, then you could use the other 5,000 in here from your PPP towards your wages and not be included in this $10,000. You just can't say, well, I'm using PPP to pay for this $15,000 wages. Then I'm also going to ask for another credit. That you cannot do. So as long as you're not using it for the exact same dollars, then you can use the ERC, claim the ERC. Okay. Now, payroll used for ERC credits are not deductible in your federal tax return. In other words, what it means is, which follows back to the next statement, you'll also be required to file an amended business tax return, because now you're going back and claiming a credit, payroll credit, for payroll that you already took a credit for in 2020 or 2021. You deducted those particular wages as deductible expenses on your 2020 and your 2021 tax return. Okay. If you now get a credit for that, you now have to go back and amend your business tax return to decrease that amount of income that you receive from the credit from your payroll, because you can't double dip for that. So as part of this whole process, you're going to have to file amended business tax return. But if I'm getting $50,000, I don't mind paying somebody $300 or $400 to do an amended return to get $40,000, $50,000. Just remember that is that you're going to have to file an amended tax return, your business tax return. All right, so we were talking about the PPP versus ERC. I'm just going to give you a little bit of an example here. So for this particular company, is that in January, so this particular company had $50,000 of PPP loan, okay? And if you remember the PPP, you could use it all as payroll, but you had to use at least 60% of it for payroll. So I'm going to make this simple and just say they used all $50,000 of their PPP for payroll. So total ERC allowed payroll was $20,000. So what they said, okay, 20,000 of that is used for payroll. Their therefore my allowed ERC wages are 0. So I can't claim any ERC credit for January because I don't have any money that wasn't already paid for by another program. The same thing for February. I'm still paying back that $50,000. And then in March, I still had $5,000 left over. So really, my allowed ERC wages after deducting my PPP was really only $25,000. Okay. I still get a 70% return for $17,000, but, and this is again 21 compared to 20, but so that's still a significant amount, but that's the way that works. You just got to make sure you're not using the PPP money towards the same money that you're applying credit to. All right, so let's go over a couple of questions. Some of these are late because you've already filed all this. So I'm just going to cover the ones that, where we talked about that. We talked about that. All right. If a business is required to shut down or partial shutdown suspension, in other words, there was 2 reasons why you could get the credit. One was because you were shut down. The other was because your revenue dropped more than 50% or the 80% based on 2021. Okay. If you just said, well, that doesn't affect me, but I was still shut down or partially shut down during a particular time period, you can file an employee retention credit for that, but it can only be claimed for the period of shutdown or partial suspension. In other words, if you were shut down for 2 months and you're using this particular form for determining the amount, you can only claim it for those 2 months. You can't claim it for the next quarter or the whole quarter or anything else. It's only for the exact period that you were closed down. All right, we talked about that. We talked about that. If you purchase a business, you can still take the ERC even if you acquired a business. We talked about that. All right, so this is a big one. Are wages paid to related individuals of the employee considered qualified wages? This is the big stink that there was so much talk about that unfortunately they never changed, but basically, if you're a business owner and you employ any of these people, child, grandfather, grandchild, brother, sister, stepbrother, stepsister, father, mother, stepfather, et cetera, et cetera, et cetera, those wages do not apply to qualified wages if they are related to the majority owner, which is 50% or more. If the person is less than 50% owner, then those wages would be qualified wages. Okay. So basically, if you own 49% and you have a brother working for you, then those wages are qualified wages. If you own 50% and you have a brother working for you, those wages are not qualified wages. And on top of that, wages paid to the majority owner or spouse are not included as part of the wages. Okay. If they're less than 50%, they would, more than 50%, they would not. All right, so how do you claim this credit? I kind of went through the whole process of how you do it. So how do you actually file it? So most of you already filed your 941s. I mean, if you haven't, you're in trouble because they're way late. But so basically we're looking at for 2020 and 2021, you're going to have to file what we call a 941X, which is an adjusted employee's quarterly federal tax return or claim for refund. In other words, it's an amended return. Okay. This is a manual form. This is a handwritten, a form that you have to print off, sign, and mail in. It's not an electronic submission. Also, it must be done within 3 years of the original, well, I should say of the original due date. So example, second quarter 2020 got to be filed by July 31st of 2023. So you still have time to do this, but you still want to try to do it as soon as you can just to get the money going. Okay. So if claiming for 2021 for a quarter you have not filed, that wouldn't have filed because you would have filed for that already. All right. So this is the big thing. How long would it take to get my credit? Right now, if you were filing electronically, ignore that because you've already filed your 940 return, I mean, your 941 return. If you haven't, again, you're in trouble. So what we're looking at, if you were paper filing an amended return, you can expect your refund to be anywhere between 9 and 14 months. So right now, last time I checked, the IRS had more than 1 million outstanding of these 941s. Again, these are manual forms that have to be physically looked at by a person since they're a credit. Okay. So it's going to take a while to get it back. Does that change the fact that, oh man, I got to wait a year to get my $100,000? I think I just won't do it. Okay. If you're getting a big return back, I don't care whether it's coming in 9, 14 months, it'll be a Christmas present next year. Okay. You want to go ahead and take advantage of it. All right. This is just the forms. Again, I'm not going to cover these forms. I'll just show you the one form, which is the 941X, and ignore that 6+ months. I just told you the correct date. And this is some examples of how to actually fill it out. And again, y'all forward these to you so that you can look over them of how to actually fill these forms out and determine the actual amounts. It's a little bit of an involved process. That's why, you know, an accountant or somebody else is going to charge you a decent amount to do this. I'm not going to charge you 25 or 30%, but they certainly going to charge you a reasonable amount to be able to take the time to fill this out, because it is a fairly time-consuming process. So that is my presentation, and you now know the truth behind the ERC. And hopefully I didn't completely complicate it too much, provide you enough information for you to kind of go, okay, I either qualify, I don't qualify, or I think I really need to find out more to see if I do. All right, I'm going to turn this back over to Heather and let her do whatever.